We, of course, are watching Iran and Israel, developments there, a Fed meeting coming in a couple of days, at least the decision, and the G7 ongoing, as you saw earlier, that bilateral between President Trump and Canada's Carney. All our eyes on everything today. Joe Terranova, Carrie Firestone, Jim Leventhal with me at the desk. So, Joe, we have Iran signaling, according to the Wall Street Journal, that they want to negotiate. The president all but corroborating that in the little spray they had with reporters at the G7 Fed decision. Yep. Oppenheimer says downward pressure on stocks is unlikely to be a protracted overhang. Is that how you feel as well?
That's how I feel, and that's what the market is telling us. We have the NASDAQ 100 and the comp both above Thursday's close. The S&P 6045 was the close on Thursday. We're about 4 or 5 handles below that right now. So we've made this dramatic recovery. 16 52-week highs for S&P 500 companies. You've got IBM, Microsoft, Palantir, Darden, Dash, some names that I've mentioned frequently. And yes, we continue to show the resiliency in this market. And what's interesting to me is not even the geopolitical aspect of it, is the inability with the geopolitical events to see relief in Treasury yields. We didn't get the buying in Treasury yields. Maybe the markets were pricing in some inflationary outcome from oil. I'm not sure. I don't think anyone ultimately really knows.
There are like 5 different hypotheses on why yields were doing what they were doing on Friday. And almost got a different answer for 5 different people that I interviewed on either program on Friday, either halftime or closing bell. It seems like I got a different answer.
I agree with you. And the reality is you have a 10-year sitting at 4.40, and that was supposed to be a challenge and a problem for markets. But here we are, the S&P 60-40 pushing towards a new all-time high, and I still believe that's where we're going.
Kerry, feels like when that headline crossed that Iran was signaling that it wanted to negotiate with Israel, the market got a little bit of a pickup off of that. We've pretty much held it. We're off a little bit from where we were. But do you agree with Oppenheimer today that whatever downward pressure comes to stocks because of geopolitical events or otherwise are unlikely to be a protracted overhang?
No, I don't think I agree with that. I think they're trying to, broad brush, say that the market is going up, regardless of what happens.
And you don't agree with that?
I think the market has certain constraints that are built in, and we've seen it this year already several times. The market gets to the 22 times forward earnings, and it seems to be pushing up against a ceiling. I know that the markets can trade to 23, 24 times, but this market seems to have trouble pushing through that, and I blame that on concern about earnings growth. And it could be earnings growth or less than expected earnings growth that's a result of tariffs or any kind of events or inflation or just the employment situation. We haven't had a bad situation with employment. It's all positive. But that's what the market begins to worry about. So I think we're still in that range that's bound by valuation to some extent rather than by what's going on from either Trump's conversations or what's happening in terms of who's bombing who.
Krinsky at BTIG is looking at a choppy summer ahead, that the S&P is into formidable resistance at 60.50 to 61.50. Pay attention to where we are now. We're at 60.36. That you have initial support at 59.70. I know we're throwing these numbers out, but that's what the technicians sort of do for a living. Major support at 5,800. So as long as that holds, the bulls maintain the upper hand, and we can expect new highs later on in the summer. Make sense, Jim?
I think pretty soon, frankly. Look, we're 1.5% away from an all-time high, and we know what happens regardless, Carrie, of the analytical skills, which you just displayed, which I love as well. Once you get to that all-time high, FOMO hits in. It's going to happen. It has nothing to do with numbers or forward multiples. It has to do with people looking at what's going on and saying, I want in. I think that's what's going to happen. I think it's going to happen soon. And I actually think the numbers support it from this perspective. If you look at earnings estimates for next year, and I know this is a long way away, $300 a share. Carry 22 times $300 a share, $6,600. Now, the question here is, are we actually going to hit those estimates? Well, that all depends on trade deals coming through, the tax bill getting getting through. And I actually think those are going to happen and that you'll get a clear runway. So, Scott, when you were talking about Krinsky and the chop, that chop to me is what happens in the summer as people shift from looking at 2025 earnings to looking at the year ahead earnings. And it's not a perfect transition. It's choppy as it happens. But if you get some trade deals, if you get the reciprocal tariffs down to a reasonable level and the budget bill in place, this market goes higher on FOMO.
So it's maybe it is FOMO. Joe, I thought that note today from Goldman Sachs sets the table for so many different layers of this conversation that households' allocation to equities hits a record high. 49% of their total financial assets are in equities, the highest level on record, and slightly above the previous peak of 48% in the year 2000. That suggests to them that if you continue to get high allocations to equities, you obviously have support for where the market is, and you support the valuations that some have here questioned.
Yeah, I think what's interesting is that households really never moved to the sidelines when we had the sell-off in April. It was institutions that were moving to the sidelines. I respect your argument about 22 times being a little bit rich. Jonathan Krinsky saying the markets could chop. I don't know if that's a reason to sell, though, because I think all that means potentially is you soften somewhat over the third quarter and you pull back maybe to 5,500 and 5,700. And from there, where do we go in the fourth quarter? So I don't use that as a reason to sell.
But
I think
would
more,
sell.
I think more it's set the expectation. Okay, maybe you are not breaking out above the all-time highs that Jimmy and I see coming. Maybe you get up there and it's a little bit of a short-term trap. But I think over the next 6 months, there's continued support in the form of strong corporate earnings and potentially in the form of some regulatory relief.
When I see the Goldman note today, I'm like, well, okay, Robinhood, Interactive, Schwab, you can throw them all up.
ICE 52
one after another, because it's part of the obvious place to look. Carrie, you have Schwab. Was reiterated by today at Truist. The price target $100. You see Robinhood was up. There's Interactive Brokers up 4%. We can take that before we get to the next layer of the conversation.
Yeah, I think one of the factors that's really helping those stocks is not just the hope and the belief that there'll be deregulation, but we've seen that interest rates are not giving you more of what people who say, oh, look over here, you can have 5%, maybe 5.5% on your money. You don't have to speculate in the stock market. Well, that really hasn't happened. People are still employed. We're at the low unemployment level that we've been at for years. They've got money to invest, and the place to invest it has been markets and not in bonds.
Yeah, it's like, well, where are they trading if they're have just such a high allocation to equities? You look at the obvious places that we just did, among others. Then what are they buying? Technology is the leading sector off of the April lows, as I don't think is going to surprise anybody, along with comm services. Big Tech's furious rally forces options pros to line up hedges. That's according to Bloomberg today. And you have a number, Jim, of names within the tech complex that continue to rise.
And of all stripes, frankly. So I'll start with NVIDIA, which is everybody's favorite, right? I mean, what is it, about 6% from an all-time high? Much like the market, I think it's just going to get sucked up there. And once it hits that all-time high, again, Carrie, FOMO, it happens. But if you want to look, and basically, whether it's the market or the technology sector, this is a stock picker's market. So if you're somebody like me, you're looking at stocks that are value tech, but which are doing phenomenally well. You can look at a Cisco Systems. You can look at a Qualcomm. You can look at a Google, Alphabet, which we've been talking about a lot in the past few weeks as a value tech stock, but stocks that are starting to work. So you don't have to just kind of hold your nose and buy the most expensive technology stocks out there. As I said, all stripes of technology stocks are working, and for the very good reason that that's where earnings growth is.
It's been remarkable, the breakout that we have seen in Microsoft, and I think it's AI related. And look, I'm not just saying this. I watched
Apple related.
I watched Thursday's show. Brad Gerstner was phenomenal in just simplistically describing the universe that we're living in here surrounding this innovation.
Record high today for Microsoft.
Record high continues to break out. Meta trading remarkably strong as well. NVIDIA trading well. And yes, to your point, it's Apple throwing up your hands as a shareholder and saying, okay, what am I getting from you in the near term that's going to revive the growth and give give me confidence that the AI strategy
do you have any
is ultimately
confidence in
coming.
Apple? Because
they're going to deliver.
Kind of like,
no, they're going to deliver. I disagree
right
with that. Apple will deliver.
But when?
Apple will deliver on the AI
strategy. Is there any reason for me to add to it right now? I just can't come up with a convincing reason
because you
to
have
add right now.
You have a reasonable alternative in Microsoft. You have a reasonable alternative in others. And oh, by the way, at some point, OpenAI is coming.